Welcome back to the channel where we break down the biggest stories shaping the market right now. We start today with institutional shifts in the electric vehicle sector. BOCFNA has significantly reduced its stake in Tesla, Inc. by 9.4% in the fourth quarter, marking a major move in investor sentiment. We look at the details of this reduction and what it signals for the company's future standing. We also see other major players making moves, including Net Worth Advisors LLC acquiring a new position and Davidson Capital Management Inc., lifting its holdings. This is huge news for Tesla investors.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we dive into Tesla's massive strategic pivot towards its next frontier. Tesla's long-term vision is moving aggressively beyond just electric vehicles and into the realm of automation at scale with the Optimus humanoid robot. We explore how the Shanghai Gigafactory is becoming the critical hub for this transformation, serving as the blueprint for high-volume, cost-efficient manufacturing of these complex robots. We break down the operational challenges and the massive potential this shift brings to Tesla's business model. Now for a major operational alert. Tesla is facing a significant recall. We are looking at the news that Tesla is preparing to recall over 218,800 U.S. vehicles due to an issue with the rearview camera system. We examine the specifics of this recall, the potential impact on production timelines, and what this means for the company's quality control moving forward. This is a critical piece of information for every owner. And finally, we close with some exciting forward-looking news. Get ready for the update on Tesla semis hitting the road, which brings big positive implications for California. We wrap up this edition with all the essential market intelligence you need to stay ahead. Don't miss a second of this analysis, so make sure you subscribe and hit that notification bell right now. Neu Dunkai Tight. Institutional investor activity in Tesla, Inc. Stock, TSLA, saw notable shifts in the fourth quarter, with BOCFNA reducing its stake by 9.4%. At the end of the quarter, BOCFNA held 62,230 shares, valued at $27,986,000, after selling 6,475 shares. Other institutional movements included Net Worth Advisors LLC, acquiring a new position worth approximately $26,000, and Chapman Financial Group, LLC, adding a position valued at about $26,000 in the second quarter. Conversely, Davidson Capital Management Inc. significantly reduced its holdings, lifting its stake by 79.4% in the fourth quarter, now owning 61 shares valued at $27,000 after acquiring 27 additional shares. Manning and Napier Advisors, LLC purchased a new position in the third quarter valued at about $29,000, and Prism Advisors, Inc. also established a new position in the fourth quarter valued at about $30,000. Collectively, hedge funds and institutional investors currently control 66.2% of Tesla's stock. /N analyst sentiment surrounding TSLA remains mixed. Jefferies Financial Group reiterated a neutral rating on April 22, while DZ Bank upgraded the stock from sell to hold on April 24, setting a $385 target price. Goldman Sachs Group maintained a neutral rating on April 23. Bank of America initiated coverage on March 4 with a buy rating and a $460 target price. New Street Research raised its price target from $520 to $600 and assigned a buy rating on January 6. Overall, 19 research analysts rate the stock as a buy, 17 as a hold, and 5 as a sell, resulting in an average rating of hold and an average target price of $398.42. /N company insiders have also engaged in selling. CFO Vaibhav Tanja sold 2,264 shares on March 6 for a total of $898,875.92, resulting in an 11.11% decrease in his direct ownership. Director Kathleen Wilson Thompson sold 26,409 shares on April 30th, valued at $9,985,506.99, marking a 35.3% decrease in her ownership, executed under a prearranged trading plan. Over the last quarter, insiders have sold 80,213 shares worth $30,851,105, representing 19.9% of the stock ownership. /N financially, Tesla reported quarterly earnings on April 23rd, posting 41 cents earnings per share, slightly surpassing the consensus estimate of 39 cents. Revenue reached $22.39 billion, up 15.8% year-over-year, compared to the consensus of $22.96 billion. The company maintains a debt-to-equity ratio of 0.09 and a market capitalization of $1.46 trillion. The stock has traded within a one-year range of $271 to $498.83. Tesla is pivoting its long-term strategy beyond electric vehicles to focus heavily on large-scale automation, centering its ambition around the development and production of its Optimus humanoid robot. The critical challenge now is transitioning from successful early demonstrations to industrial-scale manufacturing. This transition is being strategically anchored at Tesla's Shanghai Gigafactory, which serves as the benchmark for high-volume, cost-efficient production. Executives view Shanghai as essential for solving the scaling hurdle that has historically impeded robotics adoption. The sophisticated systems that enabled Tesla to achieve massive EV output are now being adapted to build production lines for general-purpose robots. This signals a fundamental shift in Tesla's business model, where robotics introduces a new product category with distinct margins and operational profiles. Shanghai's manufacturing prowess is undeniable. In 2025, the plant produced over 850,000 vehicles, representing more than half of Tesla's global deliveries, demonstrating superior scale, process optimization, and supply chain integration. This location provides significant advantages for robotics manufacturing, as the concentration of electronics infrastructure, skilled labor, and suppliers in China reduces logistics friction and accelerates deployment. Tesla is applying its established automotive playbook to robotics by focusing on standardizing components, streamlining assembly, and designing for scale. To manage the inherent complexity of humanoid robots operating in variable environments, the company is focusing on modular components and consistent architectures to enhance manufacturing efficiency while retaining deployment flexibility. Assembly processes are anticipated to blend automation with human oversight, supported by rapid testing systems to maintain high throughput. The core objective of this robotics strategy is aggressive cost reduction. By leveraging the economies of scale achieved in high-volume vehicle production, Tesla aims to drastically lower the cost of humanoid robots. Success in this area could unlock significant market opportunities in logistics, manufacturing, and services, as the robotics market is projected for substantial expansion. While the integration of AI, hardware, and manufacturing defines Tesla's approach, the venture carries significant risks. Reliance on the Chinese manufacturing ecosystem exposes the company to geopolitical and regulatory uncertainties, alongside the inherent operational challenges of scaling a novel product category. The timeline for achieving mass production of robots at a competitive scale remains the paramount concern for industry watchers. Tesla is initiating a recall affecting over 218,800 U.S. vehicles due to an issue with the rearview camera image. The recall addresses a defect identified in the vehicle's rearview image system. Details regarding the specific nature of the issue and the necessary corrective actions for vehicle owners are expected to be released shortly. This recall impacts a significant number of Tesla vehicles across the United States, prompting immediate attention from the company and regulatory bodies. Tesla semi-trucks are on the verge of deployment, a development that signals positive implications for the state of California. According to reporting from Canary Media, this upcoming rollout of Tesla semi-trucks is viewed as a significant positive development for the Californian market and logistics sector. Further details regarding the timeline and specific impact on regional transportation infrastructure are expected as the vehicles move closer to actual operation.